Hello, it's Robert Miner with Dynamic Traders Group with some trade strategies for the week beginning December 7th. And this is where we do a brief video each week for our Twitter, YouTube, and Traders News subscribers and followers, where we highlight a couple markets that are in a potential trade position. We give you the potential setup, what it needs to do, and then you can develop a specific trade strategy like that. In our regular DT reports, we give specific trade strategies, a little more detail on each market, plus a whole bunch of markets that we don't even look at in this brief video that we do each week. So I hope you learn something every week from these videos. Whether you trade the markets that we talk about or not, you can apply what you learned to any market in any time frame. You want to learn a little bit more? Well, check out our DT reports where you can get a 1-month trial from $19, or my book High Probability Trading Strategies, which goes into detail trading from entry to exit and complete trade strategies besides what we teach here. Okay, let's get started. Let's first take a look at gold, and what we talk about gold applies to silver, applies to the GDX also. And as I mentioned last week, we're really looking for a potential weekly low this past week, and potentially not just a weekly low, but a low that would complete a correction coming down from the August high. Well, let's see what happened last week and see where we're at, and maybe get an idea of a specific trade strategy this coming week if you already haven't taken advantage of what you learned from last week. Well, this is the weekly data. We had what's called a snapback reversal week. That's a reversal pattern that W.D. Gann talked about. Snapback reversal. It's a pretty good signature when a market has reached price and time and momentum position for making a reversal. So in momentum wise in the weekly, all three, the 8, the 13, and the 21 lookbacks, they're all oversold. That's a fantastic setup to complete a weekly low. And this past week, the week ending December 4th, that had been projected as the ideal week to complete a weekly low. So here we are. We came down last week, made the snapback reversal with the new low right in the target zone, the price zone, to complete a corrective low. This is a corrective pattern coming down. So we're in price, we're in time, and dual time frame momentum, really triple time frame momentum. What happened last week? Well, on Monday, on Tuesday, we made what we call a dual look-back bull reversal in the daily momentums. So that's a dual time frame momentum setup for potentially at least to complete a weekly low. If you didn't get long on that setup, we're going to have potentially another ideal setup in the next few days. So what do we look to do? We look for the next momentum cycle on the daily data. So if we get another momentum cycle, we get a bull reversal in the momentum, and that'll be several days away because it's overbought, so we're at or near a daily high, and we make the next bull reversal in the daily momentum. That will be the ideal setup to go long with very low capital exposure, whether you do futures or you do options or you do ETF, for the potential to complete this correction from the August high. Now that's really significant. Been waiting for that setup for several weeks, and now everything has come together this past week, just as described a week ago. So that's the setup to go long. Of course, if you're one of our subscribers, this might be a good time to check out a subscription. If you haven't yet, is the day that setup is made, we're going to let you know in our nightly update or one of our video tutorials also. Also, just keep in mind that daily close above 1860.60 is the initial confirmation that the weekly low has been complete. We call that an overlap closing. So we've had one signal here, came on Tuesday following the daily momentum's dual look-back bull reversal, but that's okay. We're just in the initial stages if we are making that weekly low. So we don't forecast. We identify market position, potential reversals, trend continuations, and then specific trade strategies to enter the market with acceptable capital exposure. And that next opportunity should come by the end of this coming week when we make the next daily momentum bull reversal. Just a quick look at the euro. Great market to trade. This is weekly data for the euro from the March low. We have almost a textbook 5-wave advance into last week, where we had a 1, A, B, C, D, E, wave 2, and then 5 waves up to complete a 3, then an A, B, C, wave 4. I mean, this is just right out of the Elliott wave textbook. And then we've made a new high, and the 8 weekly momentum just reached overbought. We should have another week or two of net sideways to up before we complete this wave 5 high. And when it's complete, that, or if that's what it's making at least, it should be pretty significant, because it would complete the 5-wave advance from the March low. So it would not only have a correction lasting several weeks, potentially several months. So if you're a euro trader, you just want to be aware of that. The ideal time to complete the final end of wave 5 high is either next week, that's the week ending December 11th, and more likely the following week, the week ending December 16th, which also coincides with the next Fed Open Market Committee announcement. And you can see, these are all the past ones since March low, how often they are made at weekly highs and lows. So there would be just an ideal time would be at about around December 16th, about a week and a half before we complete the weekly high. We've already reached the end of wave 5 target zone. These are just the two key relationships. That's the 127, 162% external retracement of wave 4. There's other price relationships we use for end of wave 5, but these are the two most frequent ones. So if you're a euro trader, we probably got a little bit to go in time and price before we complete the weekly high, but that has a good possibility of being a significant high. So again, I hope you'll subscribe to our report, because we'll keep you up to date every day on this until we actually get in the short time frame position to complete that high, likely the week ending December 18th. So here's the S&P cash weekly data. Last week, we described how more than likely stock indexes were approaching a potentially fairly significant high, at least a weekly high. That's a high that's going to last a few weeks. This past week was the ideal weekly bar that would be the ideal to make the highs. We'll see in a minute. It actually spreads into this coming week by a couple of days. But just as a review, were fairly significant time factors last week and the week before that. We've reached the end of wave 5 price target zone, if indeed this is a 3 and a 4, and it's a pretty good fit. Wouldn't be surprised. The weekly momentum's reached. They actually reached dual look back overbought last week. That's also indicating that we're at or near a weekly high. What didn't happen, and I stressed in last week's video, is you not only want to be able to identify the position of the market, is it at or near a potential reversal zone or trend continuation zone, but then you have to identify the reversal and the reversal confirmation. Well, the stock indexes did not make any reversal confirmation signatures last week. So now it's even at a further extreme than it was. So we're still looking for any reversal signal and then a confirmation. So the first reversal signal that would be a wake-up call that we've probably completed the high would be a daily close below Thursday's close. And this is closing data, by the way, on the cash index. And that's at, I think it's 36.60.72, whatever Thursday's close was. Yeah, 36.66.72. If we make a close below that, we will have made a dual look back daily momentum bear reversal, and then we'll identify when that's, if and when that's made, what is the reversal confirmation signal. So again, we look for a reversal signal and then a confirmation of that reversal signal to tell us the higher time frame, in this case weekly, high has been made. So be prepared for that this coming week, because we've reached the end of time. As W.D. Gann said, when time runs out, change is inevitable. So on the weekly bars, last week was the ideal week to complete that weekly high. If we do the same time factor but on the daily bars, it actually stretches, as far as the closing high at least, into next Tuesday, December 8th. So we can give this 1 day plus or minus. But the unique thing about this particular time factor is it usually identifies the maximum time before we get a reversal. And that's in this case, when we're looking for a high, it's the low to low to high. So in other words, this advance off the October low would be the same time as this completed cycle from low to high to low, beginning with the September low into the October low. So real significant here, and this coming up on December 8th. Again, maximum time in the daily, typical at least, before we complete this advance off the October low, and which is likely to complete. Let me go back to the weekly. The advance, off of at least off the October low, and we want to keep in mind it's the potential completion of the advance of the March low. Now that's very speculative. Again, we just identify trades and reversals. I look for daily trends and weekly trends first because those are the ones that we trade. So be prepared for that. The first 2 to 3 days of next week of the potential reversal and then a reversal confirmation. So I want you to be aware of that. That's it for this week. I hope you're keeping healthy, helping out neighbors and friends as much as you can. Wear your mask in public. Do all that kind of stuff to keep yourself and everybody safe so we can keep doing what we like to do. That's it for today. Robert Miner, over and out.